For decades, Singapore has been untouchable in Asia. It's the undisputed financial capital of the region, home to skyscraper banks and trillion-dollar funds. Its reputation is built on discipline and trust. But in 2025, something unexpected began to unfold. A new challenger rose from Southeast Asia's islands. The Philippines is stepping into the financial spotlight. Singapore stands for wealth, precision, and efficiency. The Philippines brings youth, energy, and disruption. Its economy is among Asia's fastest-growing today. Cities are modernizing at an impressive pace. A tech-savvy population powers a new kind of finance, not built on old institutions, but on innovation. Mobile phones, startups, and digital platforms lead the way. Across Asia, companies are quietly diversifying beyond Singapore. Why? Because costs are rising and population's aging. Opportunity now lives where the energy flows. Markets like Manila, Cebu, and Clark are booming. Multinational banks are setting up fintech hubs. They're betting on the Philippines' digital finance future. So the question isn't if a new power will rise. It's who will shape Asia's next financial chapter. Can the Philippines challenge Singapore's crown by 2030? Or will Singapore reinvent itself and stay dominant? Let's break down the battle for Asia's financial future and see which nation is truly built for the next decade. Singapore, the current champion. Since the 1990s, Singapore has led Asia's financial scene, a fortress of efficiency, order, and precision. Its rise wasn't accidental. It was engineered carefully. World-class infrastructure and transparent governance built trust. Policies attracted global capital and multinational headquarters. Over 1,000 corporations operate regional offices in Singapore. Today, it boasts one of the highest GDPs per capita. Its financial district houses the world's top banks. DBS, HSBC, Citibank, and JP Morgan dominate the skyline. Sovereign wealth funds like Temasek and GIC add muscle. A small nation moving billions in global capital daily. Strengths include political stability and minimal corruption, ease of doing business, and a trusted currency. These factors made Singapore the go-to for investors. But cracks are beginning to show in the model. Precision has led to rigidity and rising costs. An aging population limits workforce expansion. Office and housing costs are among the world's highest. Singapore's model faces pressure from youthful, affordable rivals. Singapore is efficient, but expensive, and that's where the cracks begin. In a decade of fast, cheap innovation, cost and flexibility may decide the next leader. And that's where the Philippines enters the conversation. Philippines, the rising contender. For decades, the Philippines exported talent, not attracted investment. But that story is changing, and fast. Growth rates above 6% signal economic momentum. A digital boom is reshaping financial access nationwide. The country is positioning for a 2030 breakthrough, one of ASEAN's fastest-growing economies today, driven by a young, connected, ambitious population. Platforms like GCash and Maya transform money movement. Millions now access tools once reserved for elites. From ride-hailing drivers to online entrepreneurs, financial inclusion is becoming economic revolution. Manila Financial Center Vision 2030 sets the tone, aims to make the capital a fintech hub, echoes Singapore's early ambitions from decades past. Cebu and Clark offer cost-efficient financial alternatives. The biggest advantage? Talent and affordability combined. Singapore faces saturation and sky-high expenses. The Philippines offers English-speaking, global-ready professionals, thanks to its diaspora and BPO training culture. Can the Philippines replicate Singapore's success? Not just talent, but trust and reputation. Because innovation moves fast, but finance demands credibility. Historical context: two different paths. Singapore's rise was a masterclass in planning. Lee Kuan Yew's vision shaped every policy. From education to housing, precision ruled strategy. The city evolved from port to global economy. The Philippines faced decades of political turbulence. Corruption and missed opportunities slowed its potential. Brain drain sent millions of skilled workers abroad. But by the early 2000s, tides began shifting. Remittances stabilized the economy and built resilience. BPO jobs created professionalism and tech fluency. Reforms in taxation and governance gained traction. Digital infrastructure began catching up with the region. By the 2020s, momentum was finally visible. Digital payments exploded and startups multiplied. Young Filipinos saw opportunity at home again. Singapore built wealth through structure. The Philippines is building momentum through scale. In a digitizing Asia, momentum may win the race. Financial ecosystem comparison. Singapore remains Asia's premier financial ecosystem. Markets valued in trillions drive global capital flows. Foreign exchange, asset management, and wealth preservation thrive. The monetary authority of Singapore earns global respect. It balances innovation with strict regulatory oversight. HSBC, JP Morgan, DBS, Credit Suisse operate seamlessly. Sovereign funds and fintech unicorns flourish in Singapore. But saturation is slowing the pace of innovation. Regulations are efficient but increasingly complex. Costs are high and talent pools stretch thin. Startups struggle against established giants in the system. The Philippines is building its financial backbone rapidly. Bangko Sentral ng Pilipinas promotes open banking rules. Digital payment standards and crypto regulations encourage growth. The stock exchange is modernizing for broader access. Mobile banking and microfinance reach millions of users. Before 2020, only 20% had formal banking access. Today, over 70% are digitally banked nationwide. GCash processes billions monthly across Asia. The contrast is striking and revealing. Singapore attracts global capital, a hub for the rich. The Philippines empowers domestic users, a hub for the masses. Both chase dominance in digital finance innovation. But as finance shifts to smartphones and data, consumer behavior may outweigh skyscrapers and trading floors. That's where the Philippines could gain the upper hand. Because in the digital era, the next financial hub won't just manage wealth, it will manage people's digital lives. Digital finance and fintech revolution. Singapore is a sophisticated fintech center globally. Venture capital flows and innovation labs thrive. Marina Bay hosts global conferences and investors. Fintech collaboration is strong but expensive. Startups face high barriers and limited access. Opportunities favor capital-rich, globally connected players. The Philippines is experiencing a grassroots fintech revolution. Over 90% of adults use e-wallets daily. It's one of the world's most digital-ready markets. GCash processes billions monthly across services. Remittances, crypto, and payments are deeply integrated. Partnerships with Alipay and MasterCard expand reach. Government supports inclusive finance and blockchain growth. Cashless economies are becoming national priorities. Startups operate with lower costs and wider reach. They serve a massive population skipping traditional banking. Foreign investors are entering the market rapidly. Global funds bet on the Philippines' fintech future. Some call it the Silicon Valley of ASEAN. Singapore built the banks. The Philippines builds users. And in the next phase of finance, users are the real power and influence. Here's your split version of sections 7 through 11, formatted exactly as requested. Minimum 8 words per line, maximum 2 lines per block, no spaces between blocks. Human capital and demographic edge. When it comes to people, the real foundation of any financial hub, the contrast is sharp. Singapore's population stands at just 5.9 million. Its median age is 42 and rising. Foreign labor is needed to sustain its workforce. Skilled but small, efficient, yet demographically constrained. The Philippines, meanwhile, is bursting with human capital. Over 115 million people, median age just 25. One of Asia's youngest, most dynamic labor forces. Millions already work for international clients and firms. From accounting to fintech, Filipinos power global operations. Outsourced labor has evolved into global workforce networks. A new trend is emerging: brain circulation. OFWs are returning with savings and global expertise. They're not just coming home, they're bringing the world. English fluency and Western business alignment help. Strong education systems produce fintech-ready graduates yearly. Universities like 8neo and UP lead the charge. Thousands trained in finance and digital systems emerge. In a world where talent drives financial hubs, the Philippines holds Asia's demographic advantage. But talent alone isn't enough. Infrastructure decides who wins. Infrastructure and connectivity. Singapore's infrastructure is Asia's gold standard. Changi Airport offers unmatched global connectivity. Ports handle massive trade volumes with precision. Urban transport is clean, integrated, and punctual. Its systems are built for maximum efficiency. For decades, this backbone made Singapore unbeatable. But the Philippines is closing in fast. Build Better More drives massive infrastructure upgrades. Airports, railways, and expressways are expanding nationwide. Clark Airport and Bonifacio Global City are rising. Smart city zones are reshaping urban landscapes. Digital investments in fiber and 5G are growing. Metro Manila and Cebu become regional tech hubs. Google Cloud and AWS build local infrastructure. Energy reliability and logistics still need improvement, but the gap is narrowing every year. The Philippines is no longer a laggard. It's a late bloomer catching up fast. The next factor that decides dominance: policy and governance. Policy, reforms, and business climate. Infrastructure is the body, policy is the mind. Singapore has always excelled in business environment. Near-zero corruption and pro-investor tax regimes help. Streamlined systems allow fast business registration. It ranks high in ease of doing business. Corporations trust its predictability and legal certainty. The Philippines once struggled with bureaucracy and red tape, but it's undergoing major reform waves now. The CREATE Act cut corporate taxes significantly. Foreign ownership restrictions are being relaxed steadily. Telecom and retail sectors now welcome global capital. Anti-red tape laws and digital tax systems launched. E-governance reduces human intervention and inefficiency. Banco Central supports fintech-friendly regulation and innovation. Financial stability is maintained while startups flourish. Regional investors are shifting operations to the Philippines. Shared services and back-office functions move to Manila. What was once a risky frontier market is now a pragmatic business alternative. Reforms are important, but perception drives global capital. Global perception and brand. In finance, reputation is currency and trust. Singapore's brand stands for prestige and predictability. Clean governance and low risk attract investors. It's where the world's wealthiest park assets. But the Philippines brand is evolving fast. From remittances to outsourcing, now innovation and talent. Major media outlets highlight Manila's transformation. Think tanks call it Asia's breakout economy. Global corporations are expanding operations post-2025. Foreign banks and tech firms enter the market. Finance and analytics hubs rise in Metro Manila. The narrative shifts from labor to digital services. Reputation takes decades to build, but disruption can change it in years. And disruption is what the Philippines delivers. Now let's compare what truly drives future dominance. Economic momentum. Economic momentum to 2030. Forecasts show a clear divergence in growth. Singapore remains stable, but growth has plateaued. Annual GDP growth averages 2 to 3% today. It's wealthy, yes, but mature and aging. The Philippines is projected to grow 6 to 7% annually, one of Asia's fastest growing economies through 2030. Growth is broad-based across multiple sectors. Middle-class expansion fuels consumption and demand. Digital commerce is booming across the country. Foreign direct investment continues to rise steadily. Philippines may hit $1 trillion GDP by 2030. It could overtake Thailand and Malaysia in output. Singapore's challenge is long-term sustainability. High costs and aging demographics limit expansion. It's shifting focus to wealth preservation strategies. The Philippines is in growth acceleration mode, building, hiring, and consuming at record speed. Investors are noticing the divergence in momentum. Capital seeks new frontiers and finds the Philippines. Singapore remains dominant in wealth management, but the Philippines attracts growth-focused investment. Singapore has wealth, the Philippines has growth. And history shows, in every economic race, growth always wins in the long run. 12. Challenges for both nations. Every economic powerhouse has its weak spots. Singapore and the Philippines face critical challenges ahead. Singapore's biggest obstacle is cost and affordability. Efficiency now comes with a steep price tag. Office rents and living costs are soaring. Startups and mid-sized firms feel the squeeze. Singapore's median age is above 42 years. A shrinking workforce increases reliance on foreign talent. Its physical size limits future expansion opportunities. The Philippines faces governance and infrastructure challenges. Reforms are accelerating, but corruption still frustrates investors. Infrastructure is strong in cities, weaker in provinces. Climate vulnerability poses long-term economic risks. Typhoons and flooding disrupt lives and industries. Political stability and reform continuity are essential. Investor confidence depends on consistent national progress. Both nations face rising regional competition. Vietnam's manufacturing and Indonesia's digital economy are surging. The race isn't just bilateral, it's regional. Despite challenges, forecasts suggest a new balance forming in Southeast Asia. 2030 forecast: who wins? By 2030, Southeast Asia's financial map will shift. Singapore remains the region's global financial headquarters. Trust, infrastructure, and stability keep it dominant. It's the fortress of finance, globally respected. The Philippines is emerging as the finance engine. Agile, youthful, and digital-first in its approach. Manila and Cebu rival Singapore in fintech innovation. Digital transactions and remote finance operations expand fast. A massive consumer base drives tech ecosystems. The Philippines becomes Asia's financial operations hub, where transactions, coding, and engagement converge daily. A dual model begins to take shape. Singapore as Asia's wealth HQ, where money rests. Philippines as Asia's digital hub, where money moves. The financial crown may stay in Singapore, but the heartbeat of finance may pulse from Manila. Beyond competition, the debate between Singapore and the Philippines is compelling. But beneath the rivalry lies a deeper truth. This isn't just a contest, it's a convergence. Both nations are shaping Asia's financial future together. Singapore represents precision, legacy, and institutional trust. The Philippines brings energy, scale, and digital disruption. One manages capital with discipline and global systems. The other multiplies it through innovation and inclusion. Singapore builds the frameworks, the Philippines fills them. Singapore is the vault, the Philippines is the engine. In a region as diverse as Southeast Asia, these complementary strengths create a powerful synergy. ASEAN integration could amplify this partnership further. Imagine unified fintech regulations across borders, talent exchange programs between universities and startups, cross-border banking systems linking institutions and users. Singapore's institutions could scale through Filipino innovation. The Philippines' workforce could grow through Singapore's mentorship. Together, they form a connected financial ecosystem, one that balances maturity with momentum. This isn't a zero-sum game anymore. It's a shared opportunity for regional leadership. As Asia digitizes and decentralizes its economy, collaboration will matter more than competition. Singapore and the Philippines aren't just rivals. They're co-architects of the next financial era, and that's a future worth building together. The story of Singapore versus the Philippines is evolving. It's no longer about who dominates, but who adapts. Singapore built Asia's financial empire with precision and trust. The Philippines is building its revolution with youth and tech. One perfected the system, the other is reinventing it. Together, they represent two eras of Asian finance. Legacy meets disruption. Stability meets momentum. By 2030, skyscrapers won't define leadership anymore. Digital agility, inclusion, and innovation will take center stage. Singapore will remain the region's wealth headquarters, but the Philippines may become its financial heartbeat, a place where money moves, ideas scale, and users lead. This isn't just a shift in geography, it's a shift in philosophy and power. Asia's financial future will be borderless and youth-driven, and both nations have vital roles to play. So here's the real question for you. Who do you believe will lead Asia's finance scene? Will it be Singapore's legacy or the Philippines' momentum? Drop your thoughts in the comments below. Hit like, share, and subscribe for more deep dives. Because the next financial hub won't just manage wealth, it will shape the way the world transacts, connects, and grows.